Welcome to the channel, guys. I'll be breaking down my weekly trades, how we caught these pips, how we made that money. First of all, I took a trade up on USD Chef on Monday. Looking at the 4-hour time frame, I took this setup from this zone. Okay, and what is the zone? This zone is the low of February, right? So we can see from this zone we made new highs. Okay, we made new highs for 4 weeks straight, and then we retraced with a whole lot of impulsion. We took out all of this liquidity below the weekly lows. Okay, but then now we returned to the low, the ultimate low that created new highs. I took my setup a 1 to 2. Let me drop down to the 1 hour time frame. Looking at the 1 hour time frame, I realized that for most of the previous week we were in a bearish trend, right? And one thing about trends is that they end at some point, right? Price has to retrace. It's just part of the market cycle. We get to the monthly low of February. I identify special divergence. I take my setup a 1 to 2, right? Now I took it on Monday. We didn't go into profit on Monday. Profit was hit on Tuesday at exactly 3 o'clock, right? At this time, I had already made peace with the fact that this trade was not going to be a win. Okay, so one of my rules is that I take my stop loss to break even at 1 to 1. So once price reaches 1 to 1, I break even, and all my trades are 1 to 2. 90% of them are 1 to 2s. Okay, as you can see for yourself, price almost took me out at break even. It really should have I expected it to, but price didn't take me out at break even. Instead, the news event shot it up. Okay, a nice 1 to 2. I want to explain my take profit target. First of all, this whole area here, it's a strong area. Okay, I don't like it when my take profit target means price has to trade through strong zones. Okay, I find that most of the time they turn into break even or losses. So thus my take profit was right here at 0.91524. That was Monday's trade. Next up we'll be looking at Tuesday. Tuesday provided us with another setup on EuroCAD. Okay, well, first of all, I'd like you to ignore the most recent daily candle. We are on the daily candle right now. What do we see? We see that with these two bullish candles with a lot of momentum, we trade above this swing high. Okay, we broke daily structure, right? That is what I look for on the daily time frame. Obvious and clear-cut break of structure. And now to the 4-hour. On the 4-hour, we get a doji candle, right? The 12 o'clock candle in my time zone. So doji candle. We are in week 12, by the way. So on Friday, the 4-hour gives me a doji candle. Okay, as we can see, week 11 trades above week 10. Clearly bullish. Okay, and this week a lot of talk came from the Fed, right? So that also had an influence, and I always try follow I always try to follow the Fed's direction, right? Now onto the 1 hour. Looking at the 1 hour on Friday. On Friday, this was opening price and the closing price of Thursday. But look at the closing price of Thursday. It creates an order block, right? An order block right there. When there is no volume, people take this for granted. Just because there's no volume doesn't mean it's not a strong one. It is a very strong order block. Okay, another order block is created on Friday before a very momentum move up. Okay, there was a lot of momentum in this move up, right? But what else, guys? From this low, new highs were created. So all I did was wait for price to return to this zone, to the zone that I picked according to my risk appetite. I was only risking 30 pips. Okay, so I divide $5,000 by 30 pips. Okay, and then I took the trade. It's a 1 to 2 as always, and took the setup on Tuesday. It just hit my take profit. Okay, fortunately for me, but even if it didn't, I have a rule. Like I said, it would have taken me out at break even, obviously. So what is in this zone? Okay, let me highlight it for you. There's an order block, a fresh order block. Okay, order block that price is yet to tamper with. This is the low that made new highs. All right, you take your Fibonacci tool and it is at a premium price. Okay, anything below the 0.5 fib level is at a premium price. It means you get it at a discount. And what else? At this zone, I identify special divergence. If there's no special divergence, I do not take the trade, right? This order block forms at 3 o'clock, just an hour after New York open. That makes it strong. It gives it more strength. Okay, what does price do at 9? At 9 on Tuesday, I took my entry. I love taking an entry at 9 o'clock. 9 o'clock introduces some manipulation, right? A lot of traders saw this and they was like, whoa, we are going down. It's a 9 o'clock candle. But really, I just took liquidity, came into my zone and moved back up. Okay, it's ideal for your points of interest to be at a price of section where price first has to take liquidity. Like for this instance right here, this is Tuesday, price trades lower than Monday's low. Right here, right by those lows, there's liquidity. The whole of the day's liquidity is there. Price comes right back below it into my point of interest, gives me a nice setup, 1 to 2. I take profit, and this is Tuesday's setup. I only take a maximum of 2 setups a day, and fortunately for me, Tuesday gave us another setup. I took the setup on Tuesday. I woke up on Wednesday to my take profit hit. Okay, but now let's have a look at this. Week 11 ends with Friday trading above Thursday. Okay, so from the new week, I'm looking for buys, right? At the beginning of this week, on Monday, we traded above the highs of week 11. Okay, right here, we traded above that. We also traded above week 10, which tells me the markets, this pair is in a bullish mood. Okay, my bias was bullish. What else do we find? We find my 200 EMA in my point of interest. This rectangle right here is my point of interest. My point of interest also has an order block and the opening price of Monday, which is obviously the opening price of the week, right? Price is at a premium level should it come to my point of interest, which it does. So I bought this at a premium level. Okay, I bought from the low that made new highs, the low that broke structure, weekly structure, not just daily structure, weekly structure. Okay, another 1 to 2. We took the setup, me and my team, 2 o'clock. At 2 o'clock, we took the entry, right? But look what happens at 2 o'clock. Price comes down to my point of interest. My point of interest could have been here, could have been here, but the reason is below this lows is because it is easy liquidity. I saw it as easy liquidity. These are London lows, okay? Easy liquidity, that's what it does. It grabs that liquidity and it turns around. The next day, I wake up to take profit hit. I'm a happy chappy. And this is the setup, okay? All of that could have happened and I still wouldn't have taken the trade if there was no special divergence. But there was, okay? Special divergence is my signal, okay? It's my rule of thumb, okay? So all these other things are confluence tools, but my special divergence is confirmation. A nice 122 during Asian session while I'm asleep in my time zone. I wake up at about 7, take profit hit. We're swimming in profit. Wednesday, we got a beautiful setup on GJ, London session, okay? So I wanna bring to your attention what GJ does on Monday. On Monday, price trades lower than the lows of week 11, okay? It's telling me that we're bearish. From the low, this low originates from this high, the same high that grabbed all of this liquidity above these highs. Very important. It grabs that liquidity, price comes back to the zone. It's important how it comes back to the zone. It returns to the zone with corrective momentum, okay? That means a couple of legs, 3 or 4 legs to return to that zone, 2 legs just to drop down, right? So price returns to my zone, a nice 122 to take this out. I didn't take this setup on Tuesday because I had already taken 2 setups, which is my maximum. But on Wednesday, fortunately for me, I waited for price to trade above Tuesday. Okay, why? Because a lot of retail traders had buy orders above yesterday's high. The market makers know that, the banks know that. So I waited for it to trade above that. Then I wanted to see it return to the start of my point of interest, okay? It did. As soon as it returned back here, I activated the sell. Nice 122. Yes, I know I could have easily gotten a 1 to 10, but I don't trade like that. I follow my rules, right? I'm not a person who can see the future. I didn't know this was going to happen. All I was anticipating was the market to follow the trend, right? And it continued with the trend. I didn't know how long the trend was gonna go for. I didn't know how low it was gonna go. Okay, so what do we have over here? We have an order block in my point of interest. Price takes this liquidity, the previous day's liquidity. I identify special divergence. I take the setup when it returns to the start of my point of interest. In less than 2 hours, we had already taken profit. Beautiful. I love these kind of trades. I'd also like to bring this to your attention, okay? I've dropped down to the 30 minutes time frame. A doji 30-minute candle forms after grabbing yesterday's liquidity. That was confirmation for me. All right. After the formation of this doji candle, which, if you know, it's a rejection or reversal candle, I put a sell order at the start, the beginning of my point of interest. Well, alright guys, this was Thursday's trade. This was a loss. Okay, we took a trade on Thursday and we lost. That's the reality. It's not all gloom here. Sometimes it's doom, you know. 85 gloom, the rest is doom, okay? But still, I'm not feeling down. I'm all about transparency and being real to whoever can reach me. Okay, so I'm going to break down this trade and explain to you why I took the setup. Okay, first of all, let's look at what yesterday did. We saw a lot of bullish momentum. Okay, so I was anticipating price to continue with the trend, but it didn't today. It might tomorrow, but today it didn't. Okay, you take the Fibonacci tool from the low of the day to the high of the day, and we find our 0.2 here. Okay, thus I drew out a rectangle, stop loss at the 0.382, right? This rectangle is my point of interest. In this rectangle, we find my 200 EMA in there, and of course the fib levels, which I just explained. And if you look at the 30 minutes, there's an order block on the 30 minutes time frame. Okay, so this is that order block I was hoping would hold up, and then if it didn't hold up, then the 0.3 would hold up, but none of that happened. Okay, looking back at it though, I see that my point of interest should have been here somewhere. Okay, but I'm gonna learn from that, no doubt about that. Okay, back to the hourly time frame. On the hourly time frame, looking at last week, okay, this is also where I should have noticed that I'm not in the right direction. This week we were in a bullish trend from yesterday, right? But looking at last week, we were clearly bearish. Okay, so you can kind of say this was a trend in a trend, depending how you want to look at it. But guys, I took this trade over here because I identified special divergence. Okay, so special divergence was there. I took the trade. Okay, I'll take it from the bottom, or I'll take it from the 0.2. That's my setup, if I'm being honest to you. Nothing more special divergence. The dollar index must be in sync. Order blocks, Fibonacci, most importantly, market structure. Okay, I don't feel some type of way about it. I didn't take another trade. I didn't feel the need to revenge trade. I was just like, oh well, it is what it is, because I'm experienced like that. It's just where I'm at right now. Okay, that's where you find my feet on the ladder. Okay, but overall direction, I was right. As you can see, price came right back up, but my point of interest should have been around here, and I don't like it when my take profit has to make new highs. I'm sure you've heard me say that. And for me to profit off this trade, price had to make a higher high, right? That was one of the reasons I wasn't filled with confidence with this trade. I mean, I took the setup at London session. Within the very first hour of the trading day, I had already lost. Okay, didn't impact me on an emotional level because I was comfortable with what I was risking. Okay, I was comfortable with what I was risking. I risked 5k. I have 3 linked accounts to that main funded account, so I risked 5k to make 10k. I lost 5k, but if I won, I would have won 10k, and that's just the name of the game, probability, right? Even though, according to me, the probability scale had tipped to my side, but it just didn't come to fruition today. So that was Thursday's trade. Please don't forget to like and subscribe if you feel like your time was well spent. Kindly also check me out on socials at pieinthesky.strategy. If you want to learn more about special divergence and how to utilize the dollar index to increase your probability of executing a winning trade, you can check out my course, link in the description below. In the course, I teach everything about my strategy. It's the only strategy I use, and I leave no stone unturned. Full transparency, and you'll definitely learn something. You can also check out my psychology course where I teach advanced trading rules that fix the psychological challenges that traders come across. And if you're in search for a trusted broker, check out the broker I use for my personal accounts. Link in the description below. They're regulated, no hassles, super low spreads, zero swaps, 0% commissions, instant withdrawals, and you can even withdraw on the weekends. Until next time, guys, always remember the pie in the sky is profit at first bite.